And we are live. Welcome back. We got summertime rally. I think we're looking at a summertime rally. We'll go over technicals, fundamentals, macro. Let's put it together. Let's go. Okay, let's get started with the technicals. S&P 500. We're looking at SPY right now in the moment. So we're just consolidating right now. So a couple of the things that that changed over the past couple of weeks. We had the FOMC meeting, right? Got the anchored VWAP pulled up into that meeting. Actually, let's pull it back a little bit. So FOMC meeting. What was the big deal here? Look, you got to keep this in mind as going forward. We're basically looking at quantitative easing, the end of QT, okay? The end of quantitative tightening, the Fed starting June 1st, which is why I think we see the summertime rally. The Fed will be tapering QT, right? QT is removing money from the system, removing money supply from the system, and they're ending that market. Market went much higher. Yeah, sold off at the end of the day, probably from the zero DT options. Yeah, we started on YouTube. We're on YouTube right now. And then we held that support. Okay. So I got the anchored VWAP, anchored, volume weighted average from that point. Also, we had another bump higher just going into this week. What are we looking at? What's driving the market? Employment. Early morning, your stocks popped. Why? Because rates came down. Employment was weaker than expected. And yes, that's a good thing for now because it means lower rates. And the Fed has two mandates at maximum employment and price stability. So if employment slips, too much, the Fed's going to be forced, closer to cutting rates, and that's much worse having a job collapse because that's a spending collapse than having sticky inflation. So we're starting to get anchored VWAP from the high. Actually, let's go back a little bit. Let's go back to that daily chart. I think we're getting anchor VWAP from the highs. We're above that level. So we're gapping up. Look, Nvidia earnings next week. Just really quick, what do we have on the schedule? We have I believe next Wednesday is CPI. CPI next Wednesday. And then you have Nvidia earnings the week after that, right? So that's why I kind of got that marked because I want to see where we are once we get, into Nvidia earnings. That's pretty much now earning season. If we do look at earning season, right? Let's finish up the technicals here. Basically, the market is strong. We're starting to, hold higher lows, right? Making higher highs. Here's your higher high right here. Higher high, boom, higher high. And I think we'll see if we get above that tomorrow. I don't know, but we're making higher lows also. We're moving higher. FOMC meeting, QT, end of QT. They're tapering QT. Employment was weak. Rates came down. Bond market basically weakened. And so far, earnings are pretty strong. Okay. So on a technical basis, we are breaking out of the trend. I think we have one more pullback. I think we're going to pull back into that 510 area. That's what I'm looking at right now at the moment. 510 is my guess, right? I think we're going to pull back into CPI because the market wants to see. Right now, there's no CPI estimates out yet. We don't have any estimates out. I want to see what that estimate is. Is it a flat estimate, right? What is that estimate going to look like when it comes out? Why can't I find the tool I'm looking for? Okay, here we go. Yeah, so 510 for SPY, somewhere in the zone is what I'm going to be looking for here. 510, we'll see. Could be lower, I don't know. Who knows? Looking for that pullback, right? So yeah, what we might get those estimates by Friday. I'm not sure, but I want to see what are the CPI estimates. A lot of people believe we're in stagflation, and that's not actually the case right now, right? We're not there yet. It looks like it's sort of in some areas, but people get a little bit too above. I mean, they get a little too excited and try to guess, and I do the same thing. I'm guessing for a summertime rally, but the probability I think is in my favor when I look at all the variables together: fundamentals, macro, and the technicals. Now, really quick, remember this. We're going to throw this up here on the chart for YouTube. Okay. If you want to see TikTok, jump over to YouTube. If you want to see the charts, remember profit margins are rising by 0.3% from the last quarter. That's very positive. This is for S&P 500. We're not looking at small caps. S&P 500 earnings, right? The profit margins are rising. EPS, earnings per share, are set to continue to rise. This is why the earnings variable is so strong. So far, 77%. Bottom, look at the bottom, not bottom left-hand corner where I got the black circled. 77% of companies have beaten EPS estimates for the S&P 500. 77% are beating estimates. Very positive. Now, the biggest factor here, Q1, okay, Q1 earnings are now out of the recession. We're no longer in an earnings recession. We're moving out of that. What is the implication there? Well, the trend is higher. We're starting to expand. Earnings are expanding, right? So no weakness in earnings on that part. Next, we have, well, yeah, so we don't have no weakness in earnings. So I'm not worried about earnings. Some people are weak, of course, but the overall earnings are pretty strong. Overall earnings are pretty strong. So that's what we're looking at here. And then we'll move over to macro. Let's see what we have. Anything in the comments. What are you guys doing? What up, Veronica? Consumer sentiment on Friday. Yeah, that's a big one. What up, Ray? So yeah, earnings are strong. That's all I wanted to make clear. Earnings are strong, and we can move over to macro. So what do we got going on in the macro? Because that's kind of the thing the market is most worried about: inflation, interest rates, right? All those good things. First, let's look at interest rates, not the Fed funds rate, but bond rates, right? U.S. 10-year. I think we're peaked out here. And this is what's really driving markets at the moment. I think we're most sensitive to these interest rates. At the top here, you had 4.7%. Look, every company in the stock market borrows debt. They all borrow debt. Apple, Amazon, they all borrow money, right? And their costs are going to come from the Fed funds. I mean, I'm sorry, the costs are going to come from the bond market. So whatever this 10-year rate is, it's not exactly their rate, but the movement of this moves their rate. So, the more it falls, I mean, hey, stocks go higher because they have more earnings. They can retain more earnings because they're paying less cost on their borrowed money, right? That is why I'm looking at rates. So we're down in that trend. We did come down. I think we're peaked out here. Unless we get a upside surprise from inflation, I think rates have actually peaked. Another component to rates, what gets rates down is bond market, right? The bond yields. I'm sorry, the actual bond. They move in the opposite direction. So to see that, we want to go to TLT. Is there a bid in TLT? Okay, now let's take a look. Watch how TLT has been moving up here. We had the QT taper and that FOMC meeting. Okay, the QT taper was right here. Ever since the Fed announced they're going to be tapering, the bond market moved up, interest rates come down, right? Bonds are moving up because they know the Fed is coming in with liquidity, and so is the US Treasury. Remember this? Where is it at? Remember this, another form of QE. Treasury is announcing the launch of a buyback program where they buy back bonds. It's not tremendous liquidity, but the fact that they're even starting it tells you that they are trying to cap rates. They're buying up their own bonds. Okay, so bond market goes up, rates come down, bullish for the market. Very bullish. You have the employment report. What happens after the employment report? It was weaker. People bought bonds because when the economy looks weaker, bonds go higher. It's fixed income. Okay. It's supposed to be risk off, or, you buy bonds when things are weak. So employment was weak, things go up. Now, as long as bonds go up, the market's going to go up because rates are coming down. That is the whole thing. But today we actually had a treasury auction. So go ahead. I'm gonna throw up the slide. We had a treasury auction today. So actually the biggest 10-year, this is for the 10-year rate or the 10-year bond. We had the biggest auction in history, in US history. The biggest auction was today. It was actually today. Actually, there was one in February, same thing, 42 billion. So the US Treasury, Janet Yellen, is basically, they're putting $42 billion of they're issuing $42 billion of US Treasuries on the market to see who's going to come out and buy them. If they don't get bought, bought up, rates go higher because that's more supply. More supply of bonds drives down prices and rates go higher. Okay, I know that's kind of quick, but the whole point here is this auction got bought up. Not at this rate, right? What was the bond auction rate today? I think the bond auction rate today was they got bought up for, where did I put it? I put it somewhere. I think it was it was today's rate. It was 4 point, let's go to the 10-year. So $42 billion of bonds got bought at, here we go, we're at 4.49, at 4.48%. right? They're getting that yield, basically the coupon, whatever, and they're buying up bonds. So hopefully, if they keep buying, bonds are going to roll over, right? So it really comes down to inflation. That's where it comes down. So the bond market is showing enough to be tapering. So I think we're going lower for bonds, and I mean, I'm sorry, we're going lower for rates here. That next component is going to be, GDP. You hear we're in stagflation, but how can we be in stagflation, right? We're not there yet just because we had a little bit of weakness for 2 months. Well, Atlanta Fed GDP today, which is GDP Nowcast, it looks at every single week and it extrapolates what GDP would be. We're at 4.2%. 4.2%. That is not stagflation. That is strong growth. Maybe stronger. Maybe rates, don't fall too quickly. That's pretty strong growth though. 4.2 is strong. And this moves every week, but it's an intraday or it's a coincident indicator. And what it tells us is there is no stagflation, right? Maybe the inflation part is stickier. Oh, you don't like that? I'm sorry, but there is no stagflation, right? Um, GDP is up, so it would be reflation. If GDP was tanking, you would have stagflation. Thanks for the thumbs down, though. I do appreciate the feedback. Um, if GDP was down, it would be stagflation. Stagflation, really quick for some of you guys who are new, is falling GDP growth or falling forward-looking growth, okay, weakening growth and rising inflation. But right now, growth is slowing down. It's cooling in a lot of areas, but GDP is still pretty strong. It's not, going negative. It's not at 1%. That's just the facts of the matter. If you don't believe the data, well, what do you go to? You go through your crystal ball. What are you looking through, right? You can't just make up data. This is the data we go through. Now inflation is a little sticky, and we're going to look at that. Here's one reason I wanted to point this out really quick. Again, if you want to see these charts and you're on TikTok, jump over to YouTube, link in the bio. I'm going to put up the 10. No, let's put up the dollar here. The dollar might be weakening. If the dollar falls, this is a tailwind. Okay. But here's the thing. The ECB is actually going to be deciding whether they cut rates, or the Bank of England might be cutting rates tomorrow. I believe it's Thursday. If they cut rates, the dollar will probably strengthen. Actually, no, if they cut, yeah, the dollar will strengthen because they're going to weaken their currency versus the dollar. But that's not so bad for the US dollar. That's not a, I mean, I'm sorry, for the stock market, for crypto, it's not a bad, it's not too bad because this tells you the US economy is strong. Okay. Dollar going up, US economy strong. It's not really a risk up move. It's more of a, okay, strong dollar, strong economy, and they're debasing their currency in another country. So the dollar retains its value a little better. We're not at QE yet, right? We haven't cut rates yet. When we cut rates, then the dollar is going to fall. When we actually do cut rates and when we do start up really strong QE, we're not there yet. But yeah. So, and guess what? If Europe cuts rates tomorrow, I don't know if they do, then that's just going to increase more global liquidity. Those are central banks cutting interest rates, which means more money, more credit. All right. So auto insurance, shelter. So going to inflation, this is kind of the issue. Like this determines everything. Where's inflation at? Number one, we had the ceasefire. Remember, we had the ceasefire. Does it last? Who knows? But we did have the ceasefire from between Israel and Gaza. And what that sort of does is it puts a cap on how much oil spikes. Okay, so we never got the oil spike. It just didn't happen. Can oil still break out this summer? Sure. But this is max demand. We have the most demand going into the summertime. And if we don't spike before this, right, I'm not too worried about it. The market's already pricing in, high demand in the summer. It's going to price that in. These are markets, they're forward looking. So if we're not up there yet, well, I expect us to roll over in midsummer. And that's why I think we have another rally, because you don't get the threat of inflation rapidly climbing off of oil prices. We're not there yet. Also, Saudi Arabia can increase production if the US does a deal with them. So that part of inflation, energy, doesn't look like it's going to be a big threat. The next part is shelter. Shelter is 40% of CPI. And you can see here, Fed inflation, right? Fed shelter is falling. It's still around 6%. It's pretty elevated, but it's a lagging indicator. It lags by about 6 to 12 months because people, the Fed's inflation just lags. Well, the better inflation is going to be Zillow rents, and you can see up there when Zillow in red peaked, shelter for the Fed never peaked. It didn't peak till about 12 months later. Therefore, it should still be falling. If we look at new tenant rents, right? And those are new contracts for people that are getting into apartments or renting a house. Those prices are still collapsing. They're actually at a very low, they're pretty low. So shelter prices will be falling going forward. Not, I'm sorry, not prices, right? Prices are not going to fall. That's not true. Prices don't fall. That is, inflation is not prices. Inflation is the rate of prices grow of the rate of price growth. It's the rate, not the actual prices. Prices always go up. That's why your home. That's why people invest in housing, because the houses always go up. You just don't want them to go up at a fast rate. And right now, the rate is coming down. Okay, but the prices will still go up. So shelter inflation should be falling, and that's going to come into the CPI at some point. I don't think inflation goes up. I think if anything, it's going to come down rapidly. We don't know when, but it's going to come down. I think this summer we're going to really see that. And then if you go to Redfin's data, the actual data, we're in normalized range. Month over month, we're in a normal range. Year over year on the bottom, normal range. So the rate of shelter inflation is normal. It's actually normal, but prices are elevated because of that gigantic burst in 2021. That's why they're elevated. Because once prices go up, they don't really come down. It's just the rate at which they climb does come down. That's what's happening. The rate at which price growth goes up has come down considerably. So inflation should be coming down, not prices, but inflation, right? GDP's up. So that's not really stagflationary, and now you have, bonds getting bought up, so rates should come down for the market. And then going forward a little bit, going forward again, we have the Bank of England rate decision tomorrow. Initial jobless claims, let's look out for that, because everybody's wondering, oh, are we going to have a, is that's going to give us clues to our jobless claims spiking? Are we really getting unemployment spike? I don't think we are. Now I'm going to put this on the chart here, so let's look at unemployment really quick. This is the unemployment rate. We had 3.9. When was this? February. We're at 3.9, and markets actually went up. Why? Because it puts the Fed closer to cutting rates, and cutting rates is not negative unless growth is collapsing. So a slow rise in unemployment is not bad. It gets the Fed to start QE, right? Because you're going towards a recession. You're heading that way. You're not there yet, and it gets it gets the Fed wanting to make sure that there's enough employment. I mean, not make sure there's enough employment, but to make sure that growth doesn't collapse. That's a worse scenario than sticky inflation, right? That's a worse scenario. So they're going to make sure they cut something, or at least start more QE or reduce QT faster if unemployment creeps up. Now, if we get a spike, trust me, it's a lagging indicator. You're not going to get a spike all of a sudden. You're going to know something collapsed. We're probably going to see a real commercial real estate default. But if that does happen, what happened last time? Again, we showed this on the last stream. Um, Actually, that's not the, where is it? Show this on the last stream, which was, thought I had it on here. Well, I mean, this is it right here. And it's just the bank failures. 2023 saw bigger bank failures than 2008 and 2009, but nobody really blinked. No, nobody really cared, simply because the Fed came in and they increased liquidity, right? They increased the Fed balance sheet, they increased liquidity. Now up here, this chart is basically, when I say liquidity, this is Bitcoin versus liquidity, looks pretty much the same. And when they did increase that liquidity last March, okay, this is it right here. This was the liquidity increase. Boom, markets went higher. Now that liquidity is kind of, it's slowing down a bit, but if we get another break in regional banks, any kind of slowdown, the Fed's going to step in. That's what they do now. Ever since '08, they inject liquidity when things weaken or there's some type of threat, right? Now, markets, can they freak out? Sure, they'll freak out for a second, but as long as they know the Fed will step in, which has been the case, markets are going to bid up. So I'm not too worried about that. Inflation, GDP's up, as of May 8th, GDP now is at 4.3%, not stagflation. Shelter inflation should roll over. We probably are sticky until the summer. And we want to see that next earnings estimate, the consensus, what that looks like. Earnings are strong, right? Overall market, anyways, earnings are strong. Individual stocks, yeah, there's weakness for sure. So I think we're going to have that rally. And then the next data print for this month should be the University of Michigan consumer sentiment. Is it really a lot? Not really. I'm running iron condors right now in the S&P because there's no data this week, right? If you have no data, actually, let's go to this chart. If you don't really have data, then markets don't move much. You're not getting much movement. So I've been running some iron condors, just, as long as price moves sideways, 2-day condors, nothing really changes. So where would you put your condor at? Well, somewhere like right here. You're right below and above this above this line. I think mine's at 520. Right. I'm just selling premium. I'm just selling premium. And then 512. I think it's at 512. Yeah, I'm at 512 down here. So there's no big data, right? That's when you want to actually do this. Um, Anyways, I don't really see nothing big happening. We don't have any real big data points till next Wednesday. That's CPI. And then Nvidia is the last big thing. So we probably do pull back. I think we're gonna pull back into CPI a little bit. We went on a pretty good run here. Where are we at in the RSI? Let's go to that 4 hour chart. I think we do pull back a bit. How far do we pull back? I'm gonna say 510, right? Right back into this previous zone here, 512, 510. Of course, we can go lower, but I'm gonna say 510. We come back into the zone, and then we'll see what CPI looks like. The estimates really do matter because if estimates are lower than last month, or as long as estimates are the same or lower, the market's okay with with CPI coming out at estimate. It's if it comes in, if the estimates are higher though, it's probably going to be bearish because you're literally showing reacceleration of inflation. So the estimates come first, not the actual inflation print, the estimates, which we should be getting this weekend. I don't even know when the estimates come out. I'm going to be checking the calendar to see, but that's what we want to see. What are the estimates? What actually is the consensus? That's what markets move off of, actual consensus. And remember, EPS is moving up, earnings per share moving up, profit margins moving up. So everything's in line for a market rally. And the Fed is starting QE. That's your biggest bid right here. Fed is starting QE, and the US Treasury is also doing QE. So you don't have a whole lot of huge risks in the market. A lot of it is just fear porn, right? A lot of it is fear porn. I think we go higher. All right, and we have a sticky inflation. Yes, we do. We have some sticky inflation. Sell in May and go away. That is true, except for election cycles. Give it. Your name is give it to Mikey. Sell in May and go away is something unless it is election cycle, and we are in an election cycle, so that actually doesn't match up. Your residents, how's your books progressing? They're doing good. Thanks for asking. I actually am practicing on some people who uh, don't really know much about markets to make sure they get it. Okay. I want it to be simple. There's no point in making a course if it's too complicated. It needs to make sense. So you can read the flow of money, central bank policy. This is all, and basically um, the course is basically financing, how to identify when the market is trying to borrow and lend. It's the bond market. So the bond market, which nobody really knows how that works, very important. The bond market is huge. That is the financing mechanism for the US Treasury, and that's how you print money, is usually through the bond market, right? And then you have policy, credit, interest rates, and then obviously different stocks, but mostly reading the economy too. How do you read the ISM? How do you read actual GDP? Right? How do you read leading economic indicators, the business cycle? What do you look at? Um, those are usually the charts I throw up there. But anyways, yeah, it's coming along good, slow and steady. Crypto always weak in the summer. People go on vacations. No, Eddie, I disagree, Eddie. I think crypto rips this summer. I think crypto actually rips this summer because it is the halvening, right? The halvening is when crypto starts to bid up. Let's do a use case here. Let's actually look at this. I don't want to just be talking out my what. So let's look. Does crypto actually slow down? We can just look at Bitcoin during the summers. Is that true? I mean, maybe you do have a point, but post halvening is the most bullish parts of the season. Let's go to the halvening events. There we go. All right. So last halvening was here. Summer started. Here was the halvening August. Well, I guess in the last cycle, the halvening didn't start until late summer, right? So that was kind of different, but right after that it started to move higher. So this time the halvening happened in April, so I would, the assumption is the next 3 months crypto's going higher. Let's look at the last one. Did we have a halvening? December. I see what you mean. I don't really think it's really just summer. I think it's the halvening. Post halvening is when crypto moves higher, is what I would say. And plus, I think inflation is going to peak out here. And if that's the case, and I think it is, and the Fed is turning on the money printer. Your biggest clue here is the Fed is starting the money printer. Just keep that in mind. The Fed is net increasing money supply into the system, and that's why I'm bullish. It's just hard to confirm that information because it's like, how do you believe? You can't just believe people, right? Anyways, so what else we got? Do you consider AI that runs all of this? AI runs all of this. I'm not sure. Hyperinflation coming soon? No, no, there's no hyperinflation coming soon. Maybe in other countries, but no, there's no hyperinflation. Basically, the Fed will print money, and what they do is they buy U.S. Treasuries and they give money to to Joe Biden, whoever's in office. That's where the real inflation comes from, is all those direct stimulus checks or fiscal spending. What you want is you actually want debt growth to be productive. You want it to go into innovation. You want it to go into productivity to actually create more things. And if you create more things, faster, more efficiently, then prices can ease, and consumer prices can actually ease. So that's the key, is productive growth, and that comes through innovation. And that's why people invest in markets, because innovation is the stock market, right? Apple, Amazon, Google, Facebook, Tesla, Nvidia. And you might not like Tesla today, but hey, China's going to go ahead and say, look, we want to see that full self-driving. Go ahead and test it out over here in China. And they're going to test it out. And if it does start to work, Tesla stock's going to boom, right? The fundamentals are not solid, but I think we're at the bottom for the fundamentals. I exited my calls because, I exited them this day, I think right here. And I'll look to buy back. I think we filled the gap. We almost filled the gap, right? So I'm looking out for that CPI estimates. That's my key. CPI estimates, what are they going to be? Can you check out Dow Jones? Give your opinion. Yeah, Dow Jones. We'll check out Dow Jones. Veronica, are you talking about Forex, Dow Jones? Like, I don't know what did people trade, or is it just DIA? We'll look at DIA. Dow Jones breaking out. Okay, Dow Jones looks different than S&P. I didn't notice that. We look a little different here. Yeah, we do have sticky inflation. So Dow Jones, let's do some Dow Jones. Like Dow Jones, let's take a step back. Let's do some technicals on this, right? Earnings are strong. Um, Earnings are strong. Dow Jones holding all-time highs. It actually had a little more weakness than the overall market. This is the monthly. Let's go to the weekly chart and let's throw on I want to see which SMA do I want to see? I want to see the 50 or the 5. Do I have the 5 on here? Nah, these are the quarterly moving averages. Now, is this really going to help with Dow Jones? I'm not sure. Can I make these thicker so we can see? Yeah, let's make these thicker. Let's make these a little thicker. All right, there we go. So we can see. So first quarter of earnings, yeah, Dow Jones is bullish. We bounced off the 2 quarter. These are quarterly moving averages, so they're basically gauging the last 3 quarters, the last 2 quarters, and the last quarter of earnings. We bounced off this one. We're moving higher. So yeah, Dow Jones pretty bullish. We filled this. We filled this. This supply zone. We're starting to break above that supply zone. We probably need to consolidate a little more. Let's go down to the daily chart, and then throw in that 50-day. We're above the 50-day. So yeah, Dow Jones looks good. I mean, this is a W pattern, clear W pattern for Dow Jones. Actually, let's take this all-time high off. We don't need this anymore. Yeah, W pattern here. Look at that consolidation. That's good. There's a lot of bids there, And this is basically earnings, right? Earnings are pretty strong. We cleared this previous, support resistance area. So the Dow Jones is strong. Now, what's your base case scenario? Best case, we come back and check about 386. Okay, US 30. Yeah, you're looking at US 30. I knew it wasn't this. US 30. All right, we'll do the US 30 because this is your Forex. Same thing. Same thing. Looks really strong. Now, me personally, I'm going to be looking for this retest, right? Probably right here. US 30. So that retest is what, 38,701. That would be the best case scenario, that it comes back and holds that, because you're kind of breaking away at this point. How do you trade it? Depends how you trade, but we are running into a little bit of resistance here also. A little bit of resistance here. I would say. So this pullback and hold, perfect entry. You also have the 50-day moving average as support coming in. Let's see where that 200 is down there. This is the 10. What do I have this as? The 50. Oh, my bad. That's not the 50. That's 100. We're above the 50 is in green. Okay. So we are holding the 50 though. Same thing. Yeah. Dow Jones looks pretty good. You got some resistance here. I would wait for a pullback and a hold because I think we are going to get a retracement going into CPI. The market is a little concerned with are we going to get a reacceleration in CPI? We can look up the CPI right now. We can actually I have it on here. Let's just pull it up. Uber Riot. Okay, Uber Riot. Cool. Uber Riot. Real quick, CPI. I think I have CPI down here with the unemployment rate. Let's take this off. Yeah, here we go. Unemployment rate. How do I hide this? Here we go. So yeah, we'll see. So CPI is right here. Look, CPI is sticky. It's not reaccelerating like people say. It's pretty sticky. Okay, it's pretty sticky. So I want to see the estimates. If the estimates are low, we're good. We're good. If they're in line, I mean not in line, but if they're like, as if they're at the same level, we're good. Oil is tame. Is oil dropping? No, but it's pretty tame. There is some consumer slowing and spending, so I'm not really too concerned about that. Um, well, and we'll look at the estimates. We don't have them yet. Okay, Uber, and what Riot? Okay, look, Riot's probably going to go on a rampage. I just don't trust these because of the earnings. I don't know about the earnings when it comes to these. I'm not a fan of mining stocks. I know a lot of people like them. I'm not a fan of mining stocks because I mean maybe over the long haul. I don't know. I'm just not a fan of them. But it does look like the price action's ugly too. Looks like we're holding this level. Nice capitulation here. We should have, Bitcoin moving higher off these mining stocks. MicroStrategy, I guess it is too expensive, but you could also do Hood. So Riot, off the $10 level, you want to see it hold 10. You really want to see it hold 10. That would be good. If you see it hold 10, positive. You want to see it hold 10, maybe break the downtrend also. It's not like a super clear downtrend, right? You have that, and then you have some of this. You want to see it clear some of this. Let's go to the daily real quick. Yeah, I think I don't like this. I really don't. I mean, if it holds 10, it should be okay, but they're just sloppy. I'm just not a fan of the miners, okay? Uber, I know somebody was talking about Uber. They had earnings, big gap down. How much is that RSI? The RSI looks like it jumped and then it dropped. It looks like trash. I'm not a fan of Uber either. It looks like trash. Um, nah. Now you could do you if you think Uber, like I'm not a fan of Uber's fundamentals either. So is it a good stock? Possibly. If you like it, you can sell puts, and then you can cover it with, you can sell a put spread. So you're long on it, you buy a put here. I'm sorry, you sell a put. So you sell a put right here, and then you buy a put here for protection, and you're hoping that the stock bounces. Make sure your expiries are far out. Now, I would wait to go long until the overall market has a pullback. It's strong. We're going to remain strong. I believe S&P is actually above. Okay, yeah, we're above anchored VWAP. We are above anchored VWAP and the 50-day moving average. So S&P comes back and holds here. This is where you start to get long in your individual stocks unless they're already super bullish. Some of them might be bullish already. So that's how I look at that. Tesla. Okay, perfect. Tesla. Oh, oops. Tesla. All right, let's go to Tesla. Um, Tesla. Yeah, Tesla is a tough one. Probably the hardest stock to trade in the market. I don't think it comes down here. Let's just get rid of these. Now that we have full self-driving. All right, so we are in a gigantic. Now, this is what I'm waiting for. We're in a gigantic wedge, bull wedge, right? Dragon wedge from the lows. And when this thing does break, it's going to be tremendous, and it could gap up like crazy, just like it did the last couple weeks. So you just got to be patient with Tesla. You got to wait for the opportunity. This was a pretty good opportunity. I think we did say, hey, we're getting calls here because of the oversold extreme, and earnings came in, It priced in earnings. It priced in the worst of earnings. Also, he is creating the 25K car, the cheaper car, the Model 2. That is happening. Nobody removed that, right? So that was the narrative that drove Tesla down. That narrative is gone, and there was a short squeeze. Now, people are covering they're covering their longs. It's deflating a bit. I'm still bullish on Tesla. Now, the actual technicals, let's see, what's the daily look like? All right, let's go to that weekly RSI. I want to just see where the buying pressure is at, or the momentum. Momentum is slowly climbing. I mean, might want to see it. It might be done here. Look, 170. I think if you hold 170 over the next couple of days, you're solid. 170, 175. Um, but it's really the intraday price action that you want to see. For example, let's see, where's the bullish price action for Tesla? Something like, we haven't seen it for a while, but you want to see something like, it's a 30-minute. Nah, you don't really see it there. We haven't really had bullish intraday price action other than, back here. Not a whole lot of good examples. Most of that move was that second half of the day, and then it just started to gap up. So Tesla, you got to be patient. You got to be patient. Not a whole lot of now if it gets destroyed, because they do have right now, we are looking at more lawsuits. They're gonna go by. Somebody's trying to get their short back on. They want to cover because they probably got ripped. They probably did get ripped. Let's take this off. I don't even want to look at Tesla on this chart. This will be better if we go here. Oh, the S&P is starting to pick up. Let's go to this chart right here. So yeah, if it does break out intraday, I want to see it get above VWAP and hold. Oh, this isn't Tesla. I'm tripping. Here we go. So we are holding VWAP. This might have been the low. We'll see. Again, I think the market has one more pullback, so I'm not getting too excited for Tesla yet. Don't get too excited yet. But it did fill the gap, right? Or almost there. What is it? 160, 169. Is that our gap? Yeah, about 168, 169. So watch for capitulation at 169. 168, 169. If we get down there over the next, week or two, that's going to be a pretty nice trade. It's going to pop. It'll pop because we're getting closer to rate cuts, right? China is a big part of the revenue. Full self-driving in China. It's real narrative-ish. It's real narrative-ish. Robinhood's actually a good one. Yeah, Tesla, yeah, 168.50. Yep, Demaj, 100%. Let's see what else we got here. Robinhood. Hey, Robinhood. Now I like Robinhood because Robinhood is in their revenue cycle right now. Everybody's starting to trade again. We're back into the bull market, so they have a lot of. I think they probably had the easiest options, right? When it comes to plain options, they have the easiest options. I'm doing iron condors using Robinhood myself, or just spreads for S&P. Now Robinhood has this very strong pattern here. You're getting higher highs, right? Higher lows. It's holding higher. It keeps holding higher. But let's look at it on this chart. This will be better. And also, what's your time frame? Do you mean like just in the short term or the long term, right? So I like Robinhood because if crypto makes its rally, which I think is going to have the largest asset rally out of all of them, Robinhood's going to benefit. The only impending issue is the whole SEC going after them, but I really doubt that's going to make a big difference because it's really Bitcoin and Ethereum that carry the market. So Robinhood broke out of this downtrend. It kind of looks like AMD, and yeah, you got. I mean, it probably you probably have a small head and shoulders here, reverse head and shoulders forming. You had some stuff here. You had this head. So one more pullback into what? Into like 1650. And if we hold that, it should be solid. 1650, we are pulling into the uptrend also. Right? Here's your uptrend. Let me make it a little thicker so you guys can see that. Boom, right there. So Robinhood's in the uptrend and maybe has one more nice little pullback. I don't know how you would play it though. Everybody plays it a little different, but I'm going to say 1650. I mean, it could go as low as 1550. Who knows? We never fully know, but we do know this move is picking up steam, especially with, Bitcoin entering its bull stage of the cycle. And I think Bitcoin has one more pullback also before it starts to launch. So this is Robinhood on the weekly. Yeah, it looks good. I mean, it's cleared it's cleared a lot of resistance, and it's in an uptrend. So keep your eye on Robinhood 1650-ish. Don't chase it. If it does close though, if we do get a close above, I'm gonna say like 18. If it does close above 1850, it might just take off. But again, I think right now the market wants to see Nvidia earnings. I think we want to see Nvidia earnings at the moment. Any stock with negative profit margins, for me, it's a no. Profit margin in Hood negative 28. Yeah, but you might be right. But Hood is an early company, right? Dimaj, just like Cooler. Cooler doesn't have profit margins, right? But the fact of the matter is, it's all user growth. You want to see user growth and activity. That's going to push up Robinhood. Robinhood's not a fully mature company, so profit margins aren't as important as user growth. If it was like, if it was like more mature, if it was a bigger company, not just market cap, but if it was in its cycle of, um, it's in a growth cycle, but if it was like starting to peak out, then you don't want to see bad margins. But right now, it's all about the user growth. They're still trying to figure out how to fully run the business in a profitable way. Um, what do you think on Ethereum? I think Ethereum goes to the moon, period. I think Ethereum goes to the moon. I mean, I've said it before. I think crypto's the best opportunity in the next 9 to 12 months. I think that's the opportunity right there. Um, in my view, Bitcoin, yeah, Bitcoin, one more pullback, one more little pullback. I mean, it's holding this. It's still holding the upside trend. Now that is the weekly. Let's go to the daily chart. It is holding that trend, and you have anchored VWAP. At lowest, we come down to 50K, right? And if you get that touch at 50K, I think that's it, because the momentum is picking up. This is going to be some bullish divergence, but you can see down here the RSI hasn't fully dropped out yet. Usually it picks up when the RSI dips, below 30. So I think we have one more dip on the RSI to the downside, one more dump. Could come next week on it could come during Nvidia, it could come following CPI, but I think the summer is when you start to get the recovery. Summertime rally, stocks and crypto. Not every stock, but stocks and crypto, summertime rally. Chainlink's looking good. They are connecting with everybody. Chainlink is the global interface. I mean, this is in my view, this is the golden goose for me. Let's see if I can pull that up. I think I retweeted it. Yeah, look how many people have chains right here. If you're on YouTube, you'll be able to see it on YouTube. So Chainlink is connecting all private and public chains, okay, for smart contracts. Nobody else does this. You have Bank of America has their own blockchain. Most people aren't familiar that banks are creating their own blockchains. Wells Fargo, Bank of America. Where's Citibank at? Can I zoom in here? There's Wells Fargo, Citibank, European banks, and they have all these services. CCIP connects everybody. Proof of reserves, basically, it's an audit. It audits the chain to make sure there's no liabilities or the assets match the liabilities. There's Citibank. So you have a global network of banking connections, kind of like Swift connects all the banks. And it's not a blockchain, it's an infrastructure that you can invest in. I'm very bullish on this for the long term. I think it's early stage. I think it can be the size of Ethereum, to be honest with you. We'll see. We'll see going into the future. This is my big bet. So it looks pretty good. It is looking good. Yeah, GDP's up. Okay, back to the charts. Stellar Lumen XLM, I'll be honest, trash. Don't like it. I think Bitcoin next high is less than 90K. Yeah, you might be right, Arky. 85K, that makes sense. That makes sense. I think we hit 100K this year. If the macro continues, I think we do hit 100K in Bitcoin. But the next high, yeah, the next high is probably going to be around 80, 85 before we get another pullback, but it's looking pretty solid there. Um, it's looking solid. Chainlink is the real deal at the moment. Yeah, it's the real deal. It just doesn't do a bunch of marketing and all this other stuff. We'll see how it plays out. I mean, do your own research, but I don't see anything that has a better use case for the entire global financial system, not just crypto. This is for the whole financial system and crypto. What about Quant? Nah, they don't compete with Chainlink. Their bridges break, they get hacked. Now is Quant bullish? Sure. Sure, Quant can be bullish, but I'm sticking with Chainlink because when the crypto cycle moves, it's gonna get crazy. And it's easy to get sucked in all these other coins, and a lot of coins will fail and never come back. So I'm just going to stick with this. I've pretty much sold my Bitcoin and my Ethereum to buy more Chainlink, and I'm sticking with Chainlink. And when I'm convicted, I'm convicted. Last cycle, I sold my Bitcoin to trade Ethereum, and I know everybody's in the Solana trade, and Solana's great, but I believe Chainlink can do is a lot more valuable to the actual financial system than Solana. That's my view. Still pretty small though. I mean, it's giving you time. It's giving you time. If I get some big trades, some nice trades, like cooler technology, I'm gonna add a little more Chainlink. We'll see. I actually shouldn't be adding. I'm pretty irresponsibly long already, so I shouldn't be adding in Chainlink. This is Bitcoin at the moment, by the way. I shouldn't be adding anymore. I just need to let it ride. And then, whatever. But yeah, so that's what we're looking at here. That's what we're staring at. Any other questions for macro fundamentals? Earnings are strong, profit margins are up, S&P's, is beating expectations. What are the concerns in the market? I'm kind of curious here. What are the concerns that people have in the market? Because I know I'm hearing stagflation. We kind of debunked that. You're not really seeing stagflation. I mean, the fact that there's a ceasefire in the Middle East right now, that's going to reduce the stagflationary concerns. And then you're really looking at, let's see if the S&P is breaking out. No, not yet. So yeah, no stagflation because that's supply chain. That would be supply chain inflation going up. I mean, oil is pretty tame, so no, not coming from there. Shelter has a huge lag, right? If you rented last year and you want to refi your rent, I'm renting right now. My rent was lower. So shelter, new tenant rents are rolling over. Consumer credit came low. Yeah, listen, we're in the season where consumers are going to be super weak. The low end, at least, is going to be weak in spending. And this is good for rates. Rates come down, and that's going to push markets up. A little bit of weakness. And really, the big takeaway for markets going higher starting the summer is the Fed is injecting more liquidity. The Fed is injecting liquidity again. So let's see that global liquidity index, see what we're working with here. Let's take off Bitcoin. Don't want to see that. And this is the Fed's balance sheet. They're going to slow down the taper, right? So this is like the taper last time. They're slowing this down, and eventually it's going to start going higher. In 2019, they actually did pick up the balance sheet, and then COVID hit, and they had to inject a whole lot of money. But the taper is ending, so the pendulum, how pendulum swings back and forth, right? Well, the pendulum swung all the way to the tight side. Now it's making its way back towards easing, quantitative easing. That is ahead. That's what market's going to look forward to. You can gauge it by Fed net liquidity, right? If you're just looking at the US liquidity. If you want to see global liquidity, which should be picking up, it's making new lows here. There is no inflation in Europe either. Europe's at 2.4%, so they can cut rates. They can re-stimulate. I was actually looking at them earlier, and it looks like Europe is going to be cutting rates, re-stimulating. The UK is not as good as most of Europe. The UK is a little hot. They're at 3.4, but the European area is they're able to stimulate. China stimulating, Japan's been stimulating. So global liquidity is set to go up. The Fed, it just comes down to the Fed. But yeah, what are the concerns? Oh, consumer credit. That's what you're saying. Consumer credit. We'll see. I mean, I think the Fed cuts rates. Is that a concern? Sure. But the way it actually plays out, like I said, the banking crisis hit us in 2023 and the Fed injected liquidity. So when it comes to consumer credit, I think what happens is I'm pretty sure, okay? I'm pretty sure, Joe Biden is going to spray stimulus. If there's going to be any kind of weakness, I think he's going to spray stimulus. It's all for votes, it's all political. So they're not going to let this system fail. They're going to inject liquidity. I've been saying that since last year. They will find a way to inject liquidity. Okay, we didn't make a new high. I think we have resistance here. 518 going into what? Thursday, Friday? Okay. The war and interest rates. Okay. Interest rates. Now, interest rates, Dimaj, you mean Fed? Are you talking about Fed rates or bond rates? Two different rates. Fed rates are every couple months, and Fed rates are not going higher. They are not going higher. The question is, when do they cut? Nobody knows. They're going to cut if there is a commercial real estate collapse or default. They will cut. If there's a banking collapse, they will cut. Actually, maybe they won't. Maybe it's just bond rates that come down. We don't know, right? But I think it's going to be, if you're talking about bond rates, I think they've peaked. I think bond rates have peaked. Watch, we'll go over. Let's see. Yeah, we'll hit the mark. We'll hit the market internals. I think bond rates have peaked. Let's go to 10-year. So the real question, that is the question though. What's going to make bond rates peak? It's going to be weaker employment or, inflation not making a new high on the CPI. So you have employment and you have, let's see what the CPI is looking like. Oh, producer prices, we have those. No estimates for producer prices yet. Oh, no, we don't. We don't have an estimate for PPI. No estimate. Do we have an estimate for CPI? Not yet. So if you do want to look at the estimates, I always go to this website right here, tradingeconomics.com, and I'm looking at US inflation rate. This is the 1-year rate. You can see last we were at 3.5 in March. This is for the March data. The previous was 3.2, so it did climb higher. Consensus was 3.4. This was a negative reaction. It was higher than consensus. So I'm waiting for the consensus to come out. I don't know where to go from here. We need the consensus to come out, and then we can gauge, okay, if consensus is 3.6, not good. I think markets go sideways, rates rise a bit. If it's 3.5, that just means sticky. Not good, but it's not super bad. And if it's 3.4, that's going to be good, but we better meet it if it is 3.4. Definitely got to hit it if it's 3.4. Thoughts on Palantir? I mean, Palantir is solid. Like I said, Palantir, I'm not worried about. They crushed earnings. They crushed revenue year over year. Their commercial is going higher. It's just like Tesla. It's, the price is really high for the valuation. So they just got to stay consistent. I would just buy big dips on Palantir, right? If we come back to anchored VWAP, you're looking at, you come back to anchored VWAP, you're looking around 18, 19. SPR refuel price set the floor for oil. Dima, you're always bearish, bro, but I mean, hey, you gotta keep on your toes, right? Yeah, the SPR refuel, you're right, except why the SPR refill is irrelevant if the Saudis can pump oil, right? If they increase production, it's irrelevant. Number one. Number two, this is your biggest season for demand. So peak is coming here. The peak is going to be in June or July for oil. So it's so far it's not getting anywhere yet. And usually markets will peak before the actual peak is, right? Because they're going to front run it. So also we're now at the point where the US is the biggest supplier of oil. Also, there's other sources of energy. So demand isn't necessarily as strong as it used to be, and the US is pumping the most oil. So if they pump oil, the SPR doesn't refill, but you don't need to pull from the market, right? You don't need demand to accelerate for the market. So I would just say oil stays below 90 going into the summer. I don't think we get above 90 for the summer. And we'll see. We'll find out. Take a peek at AGIX. AGIX. Okay. What is it? AGIX? AGIX. Last calls here. Last calls here. I got a broken disc. AGIX. Was this a crypto? I don't see it popping up. AGIX US dollar. I don't know what this is. I mean, the trend is strong. That's a pretty nice trend. Looks like it's a penny. Looks like it's a small market cap. Let's see. This trend broke. So it is cooling off. Got above here. Let's see. It is a crypto, so AGIX. Yeah, you want AGIX to hold 80 cents. What is this? 80 cents? I don't know. I mean, this looks pretty volatile, but it is wedging. It is wedging. If we pull these back, right? You do have a nice wedge for AGIX for a trade at least. I don't know what the use case is. It could be a bear flag also. I mean, it is kind of bear flagging. I don't know. That's AGIX. Singularity Net is okay. Singularity Net. Not sure what they do, but good luck. Hopefully it goes. I hope it goes higher for you. Thanks for the liking the live too. Hey, if you guys want to get the newsletter, check out the newsletter. Link in the description of the bio. Free newsletter if you want to stay updated. If not, if you're not a reader, that's fine. I'll just make videos when I can. Still building the course, the macro course, so you know how to read the flow of money and read the actual economic data, the business cycle, right? You got to know how to read it. You want to know to take advantage or to increase your skills. It's really just a skill set. If you can read the data, right? And the only evidence I have is go look at my TikToks or my shorts. Um, Santa Claus, whenever the Fed pumped liquidity in 2022, I got long. I was bullish. I was bullish for too long because we had a big pullback. And then January, Santa Claus rally, we called that. Now I'm calling for a summer rally because I see more liquidity coming in. I see the business cycle sort of, turning a little bit. Hey, this thing looks good though, whatever this is. But yeah, summertime rally. Anyway, just the newsletter's free, right? Newsletter's free, nothing to worry about. You don't got to pay for nothing there, but it won't be free forever. And I'm gonna say if you're in early and we actually start the campaign, when we actually start the marketing campaign, if you're already in on the newsletter, I won't charge you. I'm gonna try not to charge you if you're already in, but we're not marketing yet. If you want to learn how to read the macro anyway. Yeah, Atlanta GDP 4.6. I thought it was 4.3. I had it on here. Atlanta GDP 4.2. 4.2, Veronica. Strong GDP there. Why do I think XLM is trash? Well, I guess I can't say I know it's trash. I think most of the use cases over the long term are already going to be taken care of by Bitcoin, Ethereum, and stuff like Chainlink. But to be honest, I don't know exactly what the use case is for XLM. I just think I think most things are going to be trash. That's just what I think. Like the graph is different. The graph's an indexer, so it's not doing like usually in markets you want to bet on the thing that dominates its market. You don't want competitors, you want monopolies. You want to own the monopolies. Is XLM a monopoly as a value transfer mechanism, as a value transfer blockchain? I don't think so. I don't think it's a monopoly. Just like Cardano, Polkadot, I think they're competing against Ethereum, and I don't think you beat Ethereum. Does it go up? Sure, but I just don't believe in it. But hey, good luck. Hopefully it goes up. That's just my view, right? Just my opinion. Maybe you know something I don't. XLM default trash. Let's see. All right, well, I'm out of here. We'll come back Friday. We'll check out the Michigan consumer sentiment. We'll see what happens. Not a whole lot of data this week, though. There's not a whole lot going on. I'm sticking with my thoughts. I think oil stays below 90. I think that's going to be great for markets. Now we don't know, this is the wild card, but guess what? As long as the war doesn't reaccelerate, traders have no reason to stack in oil. That means energy inflation remains where it is, which is not really accelerating. And it also it's not just energy, it's also plastics. There's a lot to do with the oil. Shelter is on a lag. It is holding, but is on a lag. Your worst inflation indicator is, I believe it is auto insurance. Ridiculous. 20% rate on auto, but that can't keep up forever. Auto insurance cannot keep up at this rate, and it will roll over. And hey, if there's a banking crisis, if there's another regional banking crisis or commercial real estate, that is deflationary. Deflationary. The Fed steps in, creates more money, plugs the holes. Not necessarily economic inflationary, because they don't, they're not loaning to the consumer. They're just covering up the bank's holes. And the equity owners of these commercial real estate buildings, they're losing. That is deflationary. So I actually think the disinflationary narrative continues. It's just, it's stalled out because supply chains did get halted by the Red Sea conflict. If the conflict dies down, markets are going to all-time highs, summertime rally. That's my guess. You guys stay blessed and stay blessed. Lift weights, eat healthy, improve every day, learn something new, and we'll catch you next time. Thanks for joining.